Good morning, it's Jeffrey Christian of CPM Group. It's just after 9 o'clock on Tuesday, the 19th of July. I'm actually coming to you from a insecure remote location away from New York. I am out of town. So slightly different format today, no picture of me, just some slides. I want to talk about the Platinum Group metals today. I should talk a little bit about the markets first. It's funny, I was thinking today, I was talking to somebody about market views, and I remembered the anecdote about John Maynard Keynes and a politician in England saying, the problem with you economists is that you're changing your views all the time. And Keynes said, well, when we get new information, it sometimes changes our opinions. What do you do, sir? And I thought about that because someone said, well, Jeff, a few months ago, you were saying that you thought the prices would rise, and yeah, they rose, but then they fell, and you said they were going to fall, and they fell further. And now you're saying that, at some point you do think they'll start rising again. You keep changing your market outlook. I mean, well, when the price rises, sometimes we say, let's take profits. When the price falls, sometimes we say, this is a good place to get in. And then I realized that there are a lot of people who don't change their market's view. And when the price is rising, you should be buying because silver is going to 1,000. And when the price is falling, you should be buying because silver is going to 1,000. So maybe it's not just politicians that don't do that. Anyway, our expectation continues to be that the prices are vulnerable. They're up a little bit today. Palladium has been in a $50 range so far this morning. Our expectations are that prices stay weak during July and August, and at least for gold and silver, they might start rising again at some point beyond that. We're seeing other governments, monetary authorities raising interest rates or moving toward raising interest rates, and that has caused a little bit of weakness in the dollar over the last couple days, and that has helped oil rise a couple dollars, precious metals rise a little bit, and the stock market recover a little bit. That's probably a temporary blip in a hostile summer period economically. So we're not convinced that this is anything more than a way station on the way toward weaker prices over the next few weeks. But I wanted to talk about platinum. We have our platinum yearbook coming out. We had delayed it from late June to late July. I guess next week on Tuesday the 26th, we will have an online briefing and the platinum yearbook will be done. You can order the book on our website, on our store, and you can register for that briefing at this GoToWebinar address. A lot of topics that we're going to cover in the Platinum Group Metals Yearbook and in the briefing. There's a lot happening, and it's a very interesting thing because, as in other places, what you find is that the platinum markets and the platinum mining industry are they're facing problems that they don't necessarily have the capacity to improve things upon. They're looking at the auto industry, which is their major source of fabrication demand, and they're looking at investment demand, and they're saying demand is weak for a couple of reasons, and there's really nothing readily available for us to do to improve our markets. With investment demand, they obviously could do something, but in the auto industry, the platinum industry is facing changes in the auto industry that have nothing to do with platinum per se, and there's very little that the platinum industry can do about current trends and future trends in PGM auto demand. Similarly, the auto industry is facing major changes in the demand for automobiles, many of which are beyond the scope of the auto industry to really manage effectively. Obviously, they could be doing a variety of things that they may or may not be doing. Different people have different opinions about what they should be doing, but there are a variety of issues economically, structurally within the manufacturing industry, the semiconductor shortnesses that they're seeing that are really beyond the scope of the auto industry to quickly and effectively deal with. So there are factors that have driven PGM price weakness over the past year and a half. Auto demand trends, investment demand trends. There are conditions in the auto industry which are having the effect of lower PGM demand and consequently prices. The auto industry is facing issues that it needs to figure out how it's going to turn itself around. Some of those issues are beyond its control. So they can only react to the environment and react to the demand for vehicles to a certain extent. And maybe they're being slow in doing that because of both short-term constraints and long-term uncertainties. You have the impact of the shift away from palladium toward platinum in auto catalysts, both for diesel and for gasoline, petrol-powered engines. Then you have an impact that is current, but will be much bigger in the future, of a shift to electric vehicles. There is a paucity of accurate information and accurate assessments of really what's going on in the platinum and palladium industries. I'll show you our figures in the second. They've held together well over the last 40 years. They have yielded price projections which have been relatively accurate, especially at turning points. We think that our supply demand figures are pretty accurate for that reason. But you're seeing a greater deal of uncertainty about what the true supply demand balances are in platinum and in palladium than probably any time since the 70s. Trends in investment demand I mentioned earlier, and obviously Russia's invasion on the Ukraine and sanctions against Russia are having a problem. We're going to deal with all of those issues next week in greater detail, and we're going to deal with them in the PGM yearbook. So stay tuned for that. Let's see if I can just figure out how to advance this. I want two charts, same price, but one only goes to 2019 and one goes back to 2011. And I wanted to point this out because on the right-hand side, you can see that the price of platinum came down hard 2013, 14, 15, and basically was in this $800 to $1,000 range from really the late 2015 into really into the beginning of 2021. We saw a breakout above that, and this is one of the things that CPM Group was saying for several years. We thought that the platinum price ultimately would start rising and would form a base above $1,000. It looked like it was doing that in the first half of last year, but as the second half progressed, the auto industry and auto demand for platinum weakened. In large commercial vehicles, which are the major use for platinum these days, as well as in passenger cars. So you start to see a weakening there, and we've come back below $1,000 for much of the time in the last 4 months of last year and the first 6 months of this year. So it looked like platinum was finally breaking out to the upside, but now there's been a pause on that. We still think on a longer term basis, platinum prices will break out to the upside, but given current economic and auto industry and financial market conditions, that may be a longer time now. And so we're now looking at our projections where a year ago or a year and a half ago, we were saying, well, maybe platinum prices form a base at $1,000. We're now saying that really for the next several quarters through next year, prices may well stay pretty much below $1,000 as they have for much of the last several months. So when circumstances change, we change our opinion of circumstances. This is just a longer term view. You can see we only go back to 2000 here. If you go back before that, you can see that really from the late 80s until about 2003, 2004, you saw platinum basically trading between $400 and $600 an ounce. It started to break about that during the bull market across commodities, and a very strong period of economic activity that lasted from 2002 into about 2007. Then the global recession, the financial crisis hit, price shot up, came down with a thud, shot back up, and then we got into this period that I was just talking about, where after the prices peaked in 2011, you saw investors start to sell in 2012, 2013, the first half of 2014, and they've been kind of absent the market. They have been buying, but not at the levels they were buying 2002 to 2007. These are CPM groups, surpluses and deficits, supply-demand balance, surplus of total newly refined platinum entering the market, less fabrication demand. If there's a surplus, it goes into inventories. If investors want the inventory as excess metal, as they did from 2004 to 2011, they bid the price up. If they don't want it, as was the case from 1986 until 1992, then the metal sits in the market, in that case, in the hands of mining company or market makers or refiners or auto companies, and they tend not to bid the price up. So that debt surplus that you saw from 86 to 92 corresponded with weak prices, and the surplus that you saw from 2002 to 2011 corresponded with strong prices. We've had a surplus since 2015, and it's corresponded with weak prices. And you can see here the surplus has grown sharply this year. The surplus really, in this case, reflects the weakness that we're seeing in auto demand at a time when supplies are recovering after a couple of years of stringent problems in 2020, 2021. So you're facing a surplus, and investors don't want to sop up that surplus. The prices come back down, and as long as those physical supply-demand balances remain in those circumstances, you'll see prices stay in that 800 to maybe it's $800 to $1,100 now. So we're not particularly short-term bullish on platinum, not particularly short-term bearish at prices below 900, which is where they are right now. But we do think that there's a brighter future if and when the world economy and the auto industry improve conditions. Platinum supply peaked really around 2006. That was a peak in South African production. South African production is the major source of newly refined platinum. It came down from 2006 to 2013. It fell sharply in 2014 when the South African platinum miners took a 6-month strike and sharply reduced production. Came back in 2015, and it's basically been flat. Came off in 2020 during the lockdown, came back up, but it hasn't gotten back to the levels it was in 2019 and, well, really 2015 to 2019. It's the major driver in the platinum supply sector. Russian supply has contracted over the long term, long before they invaded the Ukraine, and it remains an important part of the market, but not that significant in platinum as it is in palladium. We'll see that shortly. And then on the fabrication demand side, you can see how fabrication demand came down sharply in 2020 with the lockdown, and then came back, but again, it remains far below where it was before 2020. And the green part at the bottom is automotive demand, major factor that has really seen it's the major sector of demand, and it's the major source of weakness in demand as a result. Palladium, sort of the mirror image of platinum. We saw prices moving sideways for much of 2011 to 2017, 2019, as did platinum. but they were moving sideways at record high prices, $700, $750 for at times during that period. They broke out of that in 2017, 18, 19, moved to even higher record prices. They reached, they spiked sharply higher when Russia invaded Ukraine in the first quarter of this year. They've come back down, and they're basically trading between, say, 1950 and 2150 right now. And our expectation is that longer term palladium prices are probably headed lower, maybe not immediately, but over the next couple of years, we expect them to drift lower. We don't expect them to go back to a $750 or $1,000, but we do see scope for further weakness in the palladium price. Again, we'll talk about that next week. But part of it is that shift away from palladium to platinum. Surpluses and deficits, very similar story. In the 80s and 90s, you had market makers taking that metal up. After 2001, that spike in 2001 represented a large amount of Russian government palladium that was used as collateral for a loan. And when the price of palladium spiked to $1,080, they sold that metal and paid off that loan. So there was about 3.2 million ounces of Russian palladium that came into the market in 2001. Something of an aberration, but we saw surpluses really from 2001 into about 2014, but they fell sharply. And since about 2012, well, from 2012 to 2019, you saw a palladium market that was relatively tight. Initially, that didn't get reflected in higher prices, but then in the last 3 years of that period of time, the deficits grew sharper, and fabricators had to bid up the price to get investors and others to sell the metal back to them to meet those deficits. Those deficits disappeared with the pandemic and economic lockdown in 2020. We had a large surplus, came off a little bit last year, and it's getting bigger again this year, which is reflected in the price weakness that we're seeing. Again, with palladium, South Africa is important. It's about a third of supply, and it's been relatively flat since 2015, flat to slightly lower. Russian supply is another third or so, and it has been roughly flat to lower. There have been some floods and some smelter problems and such that have limited production on a temporary basis, but it's basically been roughly flat. And then secondary supply, which is primarily old auto catalysts, has been pumping along. Fabrication demand came off in 2020, and it's actually lower this year, or probably going to be lower this year. Our projection is that it will be lower this year than it was in 2020 because of weakness in the auto sector, especially in China and the United States, which are the two largest auto markets. Rhodium prices went parabolic. There is very little rhodium out there to meet demand. It has come off, but it's come off 50% from $30,000 down to about $15,000 today. So the rhodium price, while it's come off, is still at very high levels. We expect it to stay very high. We think there is some scope for further weakness in the next 6 quarters. But beyond that, we do think that the rhodium price will stay strong because there's a paucity of rhodium and it's required. We will be presenting a 220-page yearbook next week, which has tremendous details there. But if you really want to understand where the platinum market's going, CPM Group has this report. This is the cover from our January 2022 report, which projects supply, demand, and prices for platinum, palladium, rhodium to the year 2050. And we take it out 30 years because the transition in automotive propulsion technology is going to be extremely critical to how much platinum, palladium, and rhodium the auto industry needs. And there's a tremendous amount of uncertainty as to where exactly automotive propulsion technology will go, not only in the next few years, but in the long run. And it's probably going to take until 2050 to really see clearly what that future is and what it means for PGMs used to clean up auto emissions and what it means for the whole idea of burning petroleum in engines. We think that in 2050, we'll still be having that discussion. Before I leave, if I can figure out how to advance this, I want to talk a little bit more about the Silver Symposium. I mentioned it last week. We have agreed to speak there, and we're encouraging everyone to come there. We hope that it can be a very interesting go-to event for silver, not only in 2022, but beyond. I will be giving a speech on the real silver market, supply, demand, and prices. We will have an open forum question and answer session during one lunch where we don't have a formal presentation. People can simply come in and say, I want to talk about this. Let's talk about silver supply, silver demand, silver myths, silver conspiracy theories, what's going on in the economy, how do mints buy silver, why is it that some people believe silver is going to $1,000 and they believe that for 20 or 30 years and it hasn't happened? We're going to have this evening presentation and discussion on the evidence for and against silver market conspiracies. And then there probably will be some panel discussions that we'll participate in. So it's going to be a really good, interesting 2 days talking about silver. And I encourage everybody to sign up to go. Meanwhile, you can go to our website, free reads, free videos, and you can order our yearbooks. I will hopefully be back in New York on Friday, and we'll talk to you then.